The U.S. President Donald Trump announced sweeping reciprocal tariffs on Wednesday, including a 10% flat tax on all U.S. imports. Many other nations with the largest trade imbalances with the U.S. face higher rates, even as Trump said he had sweetened the deal by only imposing about half of what other countries charge. Trump, while announcing the tariffs, held up a chart titled Liberation Day Reciprocal Tariffs. Cambodia, Madagascar, Vietnam, Myanmar, Sri Lanka, and Laos take the biggest hit with over 40% U.S. tariffs. They are followed by China, Taiwan, Thailand, Switzerland, Indonesia, South Africa, Serbia, and Botswana with 30% or above. U.S. imposed 20% or above tariffs on the European Union, Japan, India, South Korea, Malaysia, Pakistan, Jordan, Tunisia, Kazakhstan, and West Africa's Cote d'Ivoire.
European Union, they're very tough, very, very tough traders. You think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%.
However, the U.S. left Mexico and Canada out of the reciprocal tariffs list. Both the countries already face 25% tariffs tied to drug trafficking and illegal migration. That remains in place. Now, previously announced auto tariffs of 25% kicked in from midnight U.S. time on Wednesday. In the Make America Wealthy Again address, Trump asked foreign leaders to terminate their tariffs on the U.S. and urged them to buy American goods. The U.S. president said the Indian prime minister was a good friend, but he bemoaned India's high tariffs on American goods as unfair. He also said in many cases, the friend is worse than the foe in trade.
Japan, 46%. They would charge us 46% and much higher for certain items like cars, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough. The prime minister just left, and he's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades.
Separately, Trump signed an order to eliminate a duty-free exemption for small deliveries of below $800 from China. And that is apart from the reciprocal taxes of 34% on China, which now faces a 54% total tariff. These moves have fanned fears of trade disruptions, threatening to draw immediate retaliation from U.S. trading partners. The Liberation Day announcement fulfills months of Trump campaign pledges during which he has advocated tariffs as a means of rebalancing trade ties, reviving American industry, and obtaining geopolitical concessions. But economists warned that the real fallout from trade wars would be a significant slowdown in growth and surge in inflation, which global central banks have fought hard to bring down over the last few years. J.P. Morgan analysts upped their bets for a global recession this year to a high 40%, citing Trump's economic broadsides as the main reason. While volatility was visible on Wednesday, trade conflict escalations and impact on financial markets will be for Thursday and beyond. And early trends in financial markets on Thursday show risk-off bets and lower treasury yields. While there is no break of prior ranges on market rates, it still smells like they want to go lower ahead. AFP reports that gold surged to a new record high on safe haven demand, extending its all-time high to 17 times this year during a 20% rally. Trump's latest salvo also turbocharges the worldwide trade war he began, a conflict likely to be marked by tit-for-tat strikes that destabilize supply chains, stoke inflation, and encourage more countries to form alliances that exclude America. Trump has announced a swathe of tariffs that he hopes will fund income tax cuts and incentivize manufacturing reshoring. In the long run, it may deliver positives for the U.S. economy, but the measures taken mean a painful transition period ahead. The dominant reaction is one of apprehension on what this all means for activity, and hence another push lower in market yields has been the main outcome. The impact reaction has been lower equities as priced from the futures, but the picture being painted from a generic market sense is negative for stocks. Anticipate further fallout over the coming days. Australian blue chip stock index fell nearly 2% after the Trump tariff announcement. With Tokyo's Nikkei index crashed 3.4% at open, the currency market has faced major volatility around the U.S. tariff announcement. The new global trading regime still argues for a stronger dollar, but it won't be easy to convince markets protectionism is here to stay. The Canadian dollar and Mexican peso held up gains thanks to USMCA exemption from reciprocal tariffs, while the yen remained the favored hedge as risk sentiment soured. The yen strengthened over 1% against the U.S. dollar in early exchanges on Thursday. The worst hit region by the tariff announcement is undoubtedly emerging Asian currencies, with several countries hit with high tariffs. While the early reactions to U.S. President Donald Trump's sweeping tariffs suggest an escalation in trade wars and global trade disruptions. Listen in to what the world leaders and prominent figures from around the world has to say.
Hello. I strongly believe that tariffs benefit no one. They're bad for the world economy. They hurt people. They hurt businesses. And so I regret deeply the decision of the US administration this evening to levy a tariff of 20% on all goods imported from the European Union. My priority and that of the government is to protect Irish jobs and the Irish economy.
The unilateral action that the Trump administration has taken today against every nation in the world does not come as a surprise. For Australia, these tariffs are not unexpected, but let me be clear, they are totally unwarranted.
We are going to fight these tariffs with countermeasures. We are going to protect our workers, and we are going to build the strongest economy in the G7. In a crisis, it's important to come together, and it's essential to act with purpose and with force, and that's what we will do.
This is the reason why I am convinced that we must work to avert a trade war in every possible way that would benefit no one, neither the United States nor Europe, which of course does not exclude, if necessary, also having to imagine adequate responses to defend our production.
All right, for more on this, we're now being joined by Dr. Andrew Ferris from London. He is the CEO at the Ecognosis Advisory. Thank you so much for joining us on the show this morning.
It's a pleasure.
All right, let me begin by asking you. Trump has presented what he calls reciprocal tariffs ranging from 10 to 49%, and this is addition to the 10% baseline tariff. Your first reactions?
My first reaction is sorry, I'll show you my little blue and yellow part that President Trump was pointing out. Can be totally misleading, not in the sense that it is worse or better, but the actual numbers don't tally in what very frequently the press say. The blue lines are tariffs that presumably all countries are imposing on the United States and other trade restrictions, and the yellow is the actual 10% plus whatever else is added. For example, in the case of China, the numbers we are told here is 34. Actually, the tariff imposed is 10% plus another 14+% of other tariffs. In the case of Canada and Mexico, the 25% already added onto them does not appear on that number. So I'm afraid one has to do a lot of homework to find out what is happening. In the case of India, it's very straightforward. It's a 26% additional tariff. And let's get straight away on that, because hopefully you're going to ask me, what's going to be the aspect on the impact of that on India? Please, watch my tongue, watch my lips, okay? The impact of that is likely to be very, very little. And let me give you a quantitative explanation. Exports from India to the world, okay, account for about 23% of its GDP. 23% of the GDP. Exports from India to United States account for about 18% of all exports. And that works out, a very simple calculation, that exports from India to United States account for 4%, 4.5% of its GDP. The other 96% of its GDP is completely unaffected. So even if these tariffs cause the share of Indian tariffs or Indian exports to the United States to come down from 18 perhaps to 16%, the impact of that on its growth, not on the absolute size of the GDP, is going to likely to be very small. So I get very upset with this extreme angst across the world, okay, that we're all going to die. Now, countries such as Canada and Mexico, where their exports to United States account for a large, significant percentage, we're talking about 50% or plus, the story is different. But when you come to country by country, in the case of China, exactly the same calculations I just showed you for India, GDP, okay, of exports to United States, accounted by exports to United States, is about 3%. The numbers are very small. That's why China, as you observed, is very insouciant. In other words, it really laid back and is very cool, calm, and collected, not because they don't care, is because they do not need to care.
And that being said, absolutely, because that's important because you picked it up. So that being said, UK's Prime Minister has said that trade war should not be UK's first response to tariffs. How do you gauge that, concerning that you elaborately told you about that?
It always depends. Politically speaking, if somebody imposes 20% tariffs on what I'm exporting, again, unfortunately, if you come out on television and give this very simple, but this is not an opinion, this is an actual fact explanation, that exports to the United States are important for some companies, for some regions, for some areas, but taking the whole economy together, they are a very, very small percentage, and hence the impact on our growth is going to be very little. Doesn't sound very convincing, doesn't it? Whereas if you come up and says, we're going to fight and fight strongly, we're not going to let the Americans take away the bread from our mouth. I'm exaggerating, okay?
Right. So let's talk about America now. So Donald Trump said that this move will raise billions in U.S. Treasury and create more jobs for Americans. Do you see that happening?
No. Again, I'm sorry, this is not a matter of opinion. This is a matter of fact. All the academic evidence, remember, I'm an ex-professor of economics for 25 years of my life. So I know a little bit what I'm talking about. Every single academic study on the impact of exports on the people that are imposing the exports points out that very frequently countries that are imposing the export tariffs, the tariffs coming in, they pay out of their own pocket 50 to 100%. So it is a complete non-true. Churchill called it a terminological inexactitude. He didn't want to say lie. Okay, that United States is going to collect a colossal amount of money of tariffs that the Chinese, the Indians, the Canadians, the Mexicans are going to pay. No, they're going to collect a large amount of tariffs, money out of Americans. They are going to pay for it. This is what really upsets me. I mean, it's so misleading and so inaccurate.
Right. So the global trade war term that has been trending all over, how do you look at that then?
Now, remember, we say the word trade war, okay? Trade world war, trade world war. No, it isn't. It is United States against the rest of us. I'm sorry, India is not imposing import duties on Japan. It is not telling China that it has to reduce its current account or trade surplus. I'm just making this up with India. Okay, it is all United States versus the rest of us. Do you know how much of world trade is accounted by United States? It is about 1.5 years old numbers, but it's roughly accurate, 11%. I'll say that slowly, 11%. The other 89% is accounted of trade amongst the rest of us. So, you know, if I was a global dictator, a galactic dictator, I will tell to the 89% of the people, let's get together and let's forget about the United States and let's talk trade amongst us. much more important. And you know, guess who is slowly going to achieve this position? And India has to be very careful and watches out, China.
Right. So now, what do you think about Indian sectors? Because you said that it has very little impact. Because we know that IT, pharmaceuticals, that's the sector that seems to be getting more impact. So what is your perspective on that?
Do you know which I'm sorry, this is a hypothetical question. So of course you do, but I like to start by saying, do you know which are the major exports of India? Okay, it is pharmaceuticals, important, diamonds, jewelry, yeah. Okay, but most of that material is imported in any case. And the third one is broadcasting equipment. You know, surprise, surprise. So in other words, we are not looking at everything else that India is producing that could be affected.
Right.
I know this is very important, okay, to say to the diamond sector, to the pharmaceutical sector, you are likely to be impacted on. But India is 1.3 billion people working to a huge number of other individual sectors. It's not going to be impacted. One of my favorite area in India is, of course, is the defense sector. It's not going to be impacted at all.
Right, but we've also given our a report on how the market is playing out after the announcement. How do you react to the market reactions?
My reaction to the market reaction is, again, of an ex-academic. Go and do your homework before you react. Okay, because the reaction is completely exaggerated and misses out completely country by country. We sell everything. Okay, we're all going to die, as they say. Complete nonsense. Okay, yeah, but unfortunately, I'm not the market. I'm not a trader. I'm an insignificant small potato. Okay, rightly, nobody pays any particular attention to what I say. And what should I say? But at least when I'm given the opportunity of, for example, a media, such an important medium as yourself, it's not a bad idea not to give you my opinion. I'm not telling you I think and I'm forecasting that. I'm simply telling you exports for India, it is not an important part of GDP. Exports from India to United States is not an important part of GDP. So let's not waste too much time as to what is going to happen.
All right. Well, of course, we'll be observing what plays out in the longer term. But of course, as you predicted, we'll be looking at how that plays out. But thank you so much for joining us on the show and giving your perspective.
Thank you.